Welcome to the Broker's Lounge with Eddie and Carlo. Disclaimer, the information contained in this podcast is general in nature and does not take into account your personal circumstances. Head to the show notes if you want to book a free call to discuss your personal situation.
Hi everyone and welcome back to the Broker's Lounge. We're kicking off 2025. We're here, Eddie. And,
here we are.
We've made it. We've made it
did.
to another year. So.
Yes. I'm grateful and thankful for, the new opportunity to start another year fresh and ready to.
You recharged?
That's it.
Have you been recharged?
I have.
New batteries?
Not new, just recharged. So, yeah, but we'll still do the job. It will get me through the year.
Excellent. And most importantly, good break with the family?
Absolutely, man. I cherish, these moments and grateful to be able to just wind down, look after the kids, spend a bit more time with them and just get back to it, get back to the life. So,
I feel like,
what about you?
Fantastic break. It's probably 1 week short of being just enough.
Yeah.
It would have been nice to have just that extra week, but it was good. It's a good time to spend with the family, recharge a little bit. But I feel like last year went so quick.
Yes.
But I feel like this year's got even quicker, and we're only a few weeks in already. So January's finished, and it's moving along very quickly. So now I think the first thing is we've got to recap on our New Year's resolutions. We had a couple in our last podcast.
Yes.
You remember what yours was?
Yeah, I do. You reminded me the other day.
I did remind you. So has it panned out so far? 1 month in?
Yeah, look, like I said before, I'm not huge on New Year's resolutions as such. I think you should do a daily resolution. Yeah,
a daily one?
Yeah.
I couldn't come up with that many resolutions.
It doesn't need to be a different one. Just remind yourself
That's fair enough.
The things that matter. And I guess one of the things we discussed last year was not being too harsh on yourself and but not being too soft as well. Just finding the balance where you're not abusing yourself mentally and physically, and but you need to have that push. I guess a healthy amount of stress and pressure is healthy. It keeps you moving, keeps you pushing, but just know where it's getting to the red zone. Where take a step back, just wind down a bit, and then keep moving. So that's my aim this year. So far, it's been good. I'm still remembering that, even though I think we've had the busiest January ever.
Yeah.
So things are looking good.
January's normally been the month where you come back and everyone's still on holiday. So it's all about planning and gearing up for the year and, being able to almost not ease into it too much, but it's a little bit quieter. But this year has not felt that way already. So.
Yeah, I guess the activity that we've been doing throughout last year, it all carries forward to January and this year. So there's definitely a lot of activity. There's definitely, which we're going to discuss about today, sentiment out there, how the market's looking, how people are cautiously hopeful, that things might become better and interest rates drop down and all that sort of thing. So it's all coming along together. Hopefully it continues.
Yeah, exactly.
What about your resolutions?
Yeah, my New Year's resolution was healthier eating. More exercise and being a little bit more selfish, but in a good way, and in terms of putting myself first. So, healthy eating, not too bad. I wouldn't say perfect, but definitely on the right track, which is the main thing. Exercising, tick.
Yep.
Been walking the dog every single day pretty much since being back at work. So, getting up nice and early.
That's it.
Taking the young fella for a walk, but it probably serves me well and also serves him well as well. So
just to clarify, young fella, when you say young fella,
the dog,
not
me.
No, you think as a small puppy.
No,
he's a young fella is like a cow.
He's like a greyhound.
Yeah.
But no, he's definitely enjoying it. So he's my son does not like it because he's now has his own little alarm clock that he automatically gets up at about 6 a.m. waiting for me to come and get him. So, but that's all good. And being selfish about looking after myself first, that's probably a work in progress. That'll be one that I probably need to remind myself on a daily basis and keep working through that. So
that's it. Nothing's too hard.
No, definitely not. No. So the year ahead, what do we think? There's been a lot happen already in 4 weeks.
100%. Yes.
Especially in our game.
Yes.
With interest rates.
Yes. So we've had the Big Four predict rate cuts. So what's happening there?
Yeah, so I guess up until last week, we had 2 out of the Big Four banks predicting a rate cut in February.
Yep.
Our bet was, I said March. You said December last year. So I'm closer, so I technically win that bet. But this week we had both Westpac and NAB come out and join ANZ and CBA. Because originally they had disagreed and believed that there wouldn't be a rate cut until May.
Yeah,
They've now all joined forces, and everyone is now predicting a rate cut in the February. So
it's still a prediction.
It is still a prediction. February 18th, mark it in your diaries. It's going to be an important day probably a lot of people. Probably would be the most anticipated RBA.
When was the last time we had a rate cut? Probably 3 years ago.
I think I've almost forgotten. So
I have forgotten. I think it's like 3 years.
But you talk about prediction. The financial markets are now suggesting a 95% probability. So it's almost a done deal.
Yes.
There are a few cowboys out there who are asking for a 0.5% rate cut. I think that's a little bit wishful thinking, but hey, you never know.
Well, I guess over the year, like for Feb, we might not see a 0.5 rate cut, but I think over the year we might come close to 1%.
I had a look the other day, and ANZ is anticipating 2 rate cuts.
2 rate cuts. Okay.
CBA and Westpac are predicting 4 rate cuts, and NAB are predicting 5.
There you go.
So I'm assuming they're all going to be 0.25%.
Yeah.
So, if you do the numbers, that's going to save people a lot of money on repayment. So,
absolutely.
Fingers crossed, toes crossed, everything crossed that we'll get that magical rate cut. But
yes, much needed relief.
Yeah, it's probably to give people a bit of an understanding as to what's, I guess, pushed the RBA towards delivering a rate cut.
Yeah, like obviously inflation is back within a comfortable level, even though some people talk about the underlying inflation. Some people talk about the actual inflation. So, but things have cooled down a bit. You know, I think it's more around the prices following suit as such. But like we need that incentive to push the markets up again, because it's been like, I guess we were reading the other day, and we've got it here. Like the economy is recovering gradually in 2025. Having likely experienced its slowest growth in 32 years in 2024. So this is not something, you take lightly. And we went through it, and it was a very tough and weird year, 2024. Everything's just slowing down. So 2025 here on the outlook for the year, and that's Vanguard's research, we've got a 2% expected economic growth year over year. So we'll take anything over nothing. Inflation down to 2.5%, which is within the 2 to 3% bandwidth that the RBA is comfortable with. And the interest rate is expected to go down to around the 3.5%. Down
so what's that?
That's 4.35.
So 0.85%. So potentially 3 rate cuts plus maybe a little bit more in that.
Exactly. So. And even if we don't get it fully this year, I think by 2026, like rates should have dropped down to the 3s. As not the actual bank rate, like the cash rate. And this would see mortgages in the 4% to low 4s to high 4s to low 5s, which is a lot better than what they are at the moment. So these are the things that we are looking at for this year, and obviously how this is going to reflect on the property market. So that's where, I guess, if you are looking to make this move, don't wait for the market to change. Like, you can't time the market. You just gotta do it, and hopefully the market will react in a positive way, which is everything's pointing in that direction now. So before you know it, prices will be going back up, and you could be outpriced and stay out of it. So if you've got plans to get into the market, buy a property, or even get back into investing, because I know a lot of people have sold their investment properties over the last few years, probably it's a good time to reconsider. What's your thoughts?
I think the biggest point is not sitting back and waiting. I think that's going to be the big one, because a lot of people do sit back and wait and go, and then when the RBA announces a rate cut and then they wait for the banks to pass on the rate cuts, and they go, "Oh, let's do our numbers now, and let's now start looking at the market."
Yeah,
too late almost. It's like you're missing the boat already. People who seize upon good opportunities are already doing the work now.
100%.
Or probably even started doing it towards the end of last year as
They
well.
haven't stopped.
In anticipation of potential rate cuts. So, a lot of those people will actually be sitting back right now going, right, we've got ourselves nicely set up, ready to go. We've got a pre-approval in place. Let's now start to look at the market because, like you said, once rates get cut, inevitably
Everyone's going to be jumping.
Yeah. And before 100%. We know it, there's potentially a shortage of supply, and we know what happens when that. Know what happens to property prices when that happens.
Yes. And I heard a few stories where agents are actually trying to build up their stock. So they're going out there trying to get properties ready for sale in anticipation.
Yeah.
If demand goes up, they'll have the supply to meet it and do what they need to do. So these are some of the signs out there that they're looking in favour for a good year in the property market and some gains after it's been flat for a few years, especially down here in Victoria. So we hope it's going to be a good year. But obviously, other states have been doing well, like they didn't stop performing.
Yeah.
So if you're looking at investing, you don't need to be buying in Melbourne or Victoria. There's always all these options out there, all these other states that are doing already well. So imagine a rate cut, how that's going to even push those prices even further. So we'll see how that goes.
Yeah, and it's I've got access to this. I think I might have shared it once before. What we call a property clock, and it shows all the various states around Australia and where they are in that property clock. So in terms of whether they're in a rising market, a flat market, or declining market. So it's been interesting to see how that's changed, especially over back in 2024. And I'd be keen to see how that gets affected now when it comes to 2025 when we start seeing rates come down.
Okay.
Whether there's a lot of changes from that sort of thing.
Worth sharing the results, I guess.
Yeah. There's definitely, we'll keep it in mind that as rates start to get cut further down the track, that we'll give people a bit of an insight as to potentially how the states are moving.
Yes.
We may get another buyer's agent in as well to give us a bit of a rundown as to how the property market's looking, and how it's tracking and trending as well. So,
Absolutely. Last time we had Charlie from
Aspire
Advocacy. Yes, I'm trying to remember the name. Thank you.
Normally,
it was a great
episode.
It was a great episode. Like a lot of insight in there into what to look out for and great tips he shared. So it was really good. So we'll probably get someone also to give us an insight over the coming few months and how this year is going to be looking like.
Yep.
On that clock, you've got, what's it called? The property clock.
Property clock, yes.
Okay. Where's Melbourne at?
Declining.
Yeah.
it's been in the declining section for quite some time now. Yeah. So
Adelaide is one of the best performing.
Adelaide's now better than Melbourne.
Yeah. Oh, heaps.
Maybe I go move back home.
You probably should. I know a lot of people who moved already. Like they sold their houses and moved out. So very interesting. But that tells you like nothing's constant. Like things change, policy changes, and one day or 5 years or 10 years, the state goes through a rough patch, but then policy changes, leadership changes, and then
that's a big one.
Picks back up. So I always think long term. I remember a few years back, you tell someone to buy a property in Adelaide, and they're like, what's in Adelaide? And literally in 3 years, everything just flipped.
I used to joke around and say to my wife, we should sell up here in Melbourne and I'll move back to Adelaide and we'll be able to buy like a mansion.
There you go.
The joke's on me.
Who's
now.
laughing at It's not too funny now.
That's exactly right. So, be careful what you say. That's for sure. It'll come back and bite you well and truly. So,
and thinking long term is key, and getting early on in certain markets, that's huge. I know people purchased properties in Adelaide for $300,000 and $400,000. They're worth 800 plus now.
Yeah, and once again, it also comes back to the purpose of your purchase as well. Are we talking investment? We talk about owner-occupied, because owner-occupied obviously comes with the emotional decisions that come with that as well, whereas investments, it's a numbers game, capital growth and income.
That's it.
Makes sense, doesn't it? Doesn't
100%.
really matter where it's located. I've come across people who have bought properties in Queensland and the suburbs I've never even heard of.
Yeah.
I was like, where is that?
100%.
So, it definitely makes sense, that's for sure. So, and I think, when we talk about some of the guests that we want to have on our podcast this year, I think we want to probably expand that a little bit as well.
Yeah, try to, provide as much insight as possible and bring in professionals that can add value.
Yeah.
And we can ask them the tricky questions, I guess.
The burning questions?
Yeah. So probably, you said a buyer's agent. We'll probably do 1 or 2 this year. Aiming to get Josh, who's one of our directors, to do one on financial planning and how that fits into property and lending.
Yep.
We're looking into Martin doing a couple. He's our senior commercial broker, so talking about commercial lending, commercial properties, some aspects and what to consider, what to look out for. So I think that would be a good one. And also we've got a new accountant joining the team at Link. He'll start Monday.
Yeah.
So we'll give him a few weeks before.
I thought we'd do the podcast next week
Monday.
with him. It's like, welcome aboard, sit down.
So I guess, like asking some structure and tax related questions to an accountant would be great, because like accountants are like an integral part of the puzzle of the wealth journey. So
it's really about giving people a well-rounded insight into the financial world, because it's not just about home loans or commercial loans. It's everything, picture. The bigger picture, well and truly. So
100%.
And I've actually got someone coming in a couple of weeks' time who's an expert in tax debt negotiation. So for all the self-employed people out there who potentially may have some tax debt as well, she's absolutely a gun in her field. So looking forward to Olga Koski. So couple of weeks' time, she'll be appearing. So
I'll be keen to see.
Yeah, it'd be good. It's a world that I haven't really delved into too much in the past. But I've seen some of her videos, and it's quite insightful in terms of I think there's a lot of things that she does that people don't even realise you can actually do. And she's she's actually not an accountant. She's got a legal background, so hence the tax debt negotiations part of it. So it'd be interesting to see how
that's interesting.
What the tips that she can give us. So,
well, I guess that's the point of this podcast. It's just putting as much valuable information, or just information in general. Sometimes it's not too valuable, but just sharing as much as possible, and the hope you can help someone, or someone listens to it and says, this is great, I learned something. Like, that's the whole point of doing this. So we'll try and keep that perspective coming, new, fresh people coming, giving us the expertise and information, and hopefully you guys can benefit from it as much as we do. Like, listening to these people, you learn a lot as well.
Yeah. And then we're going to have a bit of a fun one as well, a little bit down the track as well. We decided that it went back to looking at the inflation data and all that side of things as well, and the economic growth. And you talked about 32 years since we had a period like that. So we thought, wonder what things were like back 32 years ago. Unfortunately, I can remember because I was still working. I was already working in the Commonwealth Bank then. But interest rates 17.5%, 18% for both home loans and also term deposits as well. So it was on both sides of the ledger. But we thought we'd have a bit of a fun one in terms of, let's go back to say 1970 and look and compare the prices, income levels, house prices, you name it, to what it is today. And try and draw a bit of a comparison, because a lot of people say it was a lot tougher back then, and a lot of the young ones nowadays say, well, no, it's actually really tough nowadays. So we're going to try and draw some comparisons there and dispel some
Are we
myths.
going to dress 70s or?
Well, I was born in the 70s, so I could just wear like kids' clothes, could I? Oh, you mean the actual era, right? Gotcha. All right, we could do that.
All right. I need your
help.
It'd
be like a bit of a Peaky Blinders, wouldn't it?
I'll need your help.
Actually, 70s would be flares.
70s, probably.
I think we just stick to normal clothing. I do not look good in flares. I can tell you that much.
The hair doesn't help.
No, I'd have to grow the mullet again or something like that. You're in trouble.
I can't do much there. Yeah, look, that's what it's all about. Just bringing information, bringing value, having a bit of fun, having a chat, and hoping it helps someone. And that's it.
If it helps one person, we've done our job. Yeah,
that's it, man.
Good.
That's the aim.
Good stuff.
That's the aim. And obviously, we're gonna do our like we're aiming to do probably 40 to 50 episodes this year. So we'll be covering almost every topic out there and just do reruns on a lot of the topics that we did previously.
Yeah.
So that's it, I guess, for the first one. Thanks for listening, and we look forward to spend this year together. And please don't forget to subscribe, follow us, and give us your feedback, and we'll see you very soon. All the best.
Take care, everyone.
Cheers.
Bye.